My name's Richard Coulthard. I'm director at Ice & Harrison Solicitors, and I thought I would prepare a brief summary of key points arising from the autumn statement, which are going to be affecting business owners. There's a lot of hype, a lot of talk about what the autumn statement may bring, of course. My view is it perhaps wasn't as bad as it could have been, but there's still a lot that is going to be impacting business owners moving forward. First point to talk about capital gains tax increases coming in from April 2025. So this affects anyone disposing of their shares in the business. So business asset disposal relief is still available on share sales up to £1 million, but the rate of tax is increasing from 10% to 14% from the 6th of April 2025, and then increasing further from the 6th of April 2026 to 18%. So that's on the share sales for the first £1 million of any sale. It's still a lot lower than what was talked about pre-budget. Capital gains tax on shares above £1 million is increasing from 20% to 24%. So there are tax hikes there that are going to affect business owners looking to dispose of their shares in the business. Therefore, if you are thinking about succession planning or a business sale, you need to be getting on with that now. Transaction times, financing, things like that, these are all factors. Ideally, you really need to be at a point of heads of terms this side of Christmas to make sure that things are going to happen before that deadline in April 2025. Related to this, employee ownership trusts are unaffected by this, so it does mean that you can still transfer your business to an EOT and pay no tax in respect of that disposal. There are some new rules that have come in around employee ownership trusts on the 30th of October, so some slight tweaks about how those are structured, but there's still an awful lot of tax benefits associated with EOTs. Another important thing for business owners to be aware of is quite a big change around the rules to do with business property relief and agricultural property relief. Historically, these were exempt, so shares in trading businesses were exempt from inheritance tax. That is no longer going to be the case. There is still a 50% exemption against normal inheritance tax rates, but it does mean that business owners will be paying 20% of the value of their shares in inheritance tax on their death. What this means is that business owners need to be thinking now about succession planning and what happens in the event of their death. So it might be that you need to be thinking about whether you need to gift shares away, whether you need to think about selling shares before your death, or whether you need to be looking at things like cross-option agreements and shareholder protection to fund the tax that might be arising from that. So plenty of planning work there for any business owners who are concerned about their health or the risk of them dying, and making sure that their families and their estates have the monies that they were hoping to achieve from that. One of the big talking points, of course, from the budget is the change around employers' national insurance contributions. So the rate of the threshold for paying employers' national insurance decreased from £9,100 to £5,000 or